I've been an entrepreneur and I love being an entrepreneur. I still am and I'll always will be. But I think being an entrepreneur and making a lot of money is very different than wealth building. I got into a different mindset last year where I was like, all right, got all this money, need to put it to action, need it to work for me. And so that gives me the freedom to go off and do whatever I want, explore different projects, different businesses, and be the artist I want while my money is off providing an amazing lifestyle for me.
This is The Fighting Entrepreneur, the podcast dedicated to entrepreneurs looking to change the world. Learn how to start, build, and scale a business in today's highly competitive business environment. Here's your host, The Fighting Entrepreneur, Anik Singal.
What's up, you crazy fighting entrepreneurs? It's your favorite person in the whole wide world, Anik Singal, back with another fighting episode. Today's is going to be a little different, but super exciting. We're going to talk about how our guest made her family $1.5 million, that's a lot of money, in less than 1 hour a month of investing. Now, that is cool. And I want to give you the backstory of how we even got connected and how I got her on here. Lots of cool stuff to go over. This will be a very action-packed episode. You're going to be able to walk away from the end of this with actual steps that you can put into action in your life for your investing. So make sure you listen till the very end. Now, if you're listening on YouTube, come on, hit subscribe, leave a comment below, hit the thumbs up icon, hit the bell icon. We release amazing episodes. Make sure you're listening to them. If you're on iTunes, please make sure you subscribe and leave us a great review. If you want to listen to our past episodes, you are missing out, man. I've been doing this for over 2 years now, and we have amazing episodes. Anikpodcast.com, ANIK podcast.com. Get over there, stop with the Netflix, stop with the Hulu, binge listen to Anikpodcast.com. Now, last but not least, Lurn, Lurn.com. Are you a member? Almost 500,000 entrepreneurs now coming together worldwide. I keep telling you, the government's not going to change the world. We entrepreneurs are. We got to stick together. Join the community. It's free. Lurn.com. We have amazing courses. We have free courses. We have paid courses. We are building amazing features soon coming out that allow you to connect with each other. Don't miss out. Lurn.com. All right, enough of that now. Let's talk about what's going to happen. We have a guest today. She is known as the investment diva. Her name is Kiana Danial. You've probably seen her. I can tell you, you've probably seen her on Facebook or on TikTok or somewhere, because that's how I found her. And so I'll tell you something that's been going on in my life. Since the beginning of 2020, I've gotten really, really, really into wealth building. Now, you might say, Anik, you've been into this the whole time. No. I've been an entrepreneur, and I love being an entrepreneur. I still am, and I'll always will be. But I think being an entrepreneur and making a lot of money is very different than wealth building. I got into a different mindset last year where I was like, all right, got all this money, need to put it to action, need it to work for me. And so that gives me the freedom to go off and do whatever I want, explore different projects, different businesses, and be the artist I want while my money is off providing an amazing lifestyle for me. And I just didn't know how to do it. Honestly, I had no clue. And if you go back a year to today, I'm so impressed with myself, with all I've learned and what we've done. Now, in that time, and it's seriously, this interview has been a long time in coming for a multitude of reasons, mostly my fault, things falling off the map. But I saw this ad on Facebook, and it's very rare that an ad on Facebook catches my attention. Guys, I see ads all the time. We run ads. But it was of this very jubilant, happy woman who's just kind of dancing and pointing to stuff, and words are coming up. And it just got my attention. I clicked into it, and I'm like, this is brilliant. Who thought of this ad? Like, why haven't I thought of it? I've been doing advertising for years. And then I clicked and I went and saw her site. And then I get interested in the topic she's teaching. And I'm like, wow, I want to learn about, what she teaches about investment. So I went on Facebook and I literally just posted on, because my group on Facebook, my friends, they know everybody. I was like, anyone, can you get me in touch with her? And Shirley, I think it took like 2 hours or 3 hours and I had her attention. And we had a conversation after that, and I've been holding on. I don't know her investment advice. I don't know how she does her investment stuff. I wanted to do it live on this podcast. So Kiana, thank you so much for, first of all, replying and connecting, and thank you for being here. And I know it's been a long time coming, and I apologize for all the issues that took place, but we're here at last, and I'm really happy to have you on this podcast.
I am so pumped up for this, Anik. It's just super exciting to be here. And I cannot wait to dive into this because I'm like, oh my gosh, your people need this. What are you guys doing? Not investing your money.
Yeah, no, I agree with you. Everyone needs it. And just to kind of close the loop on that, guys, she had discovered that her TikTok videos that she was putting on TikTok, some of them did really well as Facebook ads. So I love it. I don't think I'm going to be shaking my booty because no one wants to see this face shaking and pointing and stuff. I'm not nearly as pretty as you, Kiana, but I'm gonna dive into TikTok world this year. Rachel was the first person who introduced me to it, and as a user, I'm addicted to the TikTok platform. I spend a lot of time watching videos, but I think this year, let's see. I think Anik might make a presence on TikTok and see how that goes. But Kiana, yes, we have a little tradition here at the Fighting Entrepreneur. So we take the oath. So if you don't mind raising your right hand and repeating after me.
Left, right. This is the right way. Okay.
Yes. I, Kiana Danial.
I, Kiana Danial.
Do solemnly swear.
Do solemnly swear.
To tell the truth and nothing but the truth.
Tell the truth and nothing but the truth.
And reveal my $1.5 million secrets.
And reveal my $1.5 million secrets.
Sweet. Awesome. All right. So here's what got my attention. And I'm going to give you the stage and I want to hear the whole story. What got my attention was the 1 hour a month thing. I told you earlier before we started, so I'm trying different strategies and playing around right now. And some of them, I mean, you really get into it, but it feels like gambling. Like you're just staring at the screen all the time. Move 2 cents, move 3 cents. I got to trade you. And that's not me. Like I don't want to be looking at my phone trading right now. I want to be hanging out with you and learning stuff. And so I think when I heard that you just don't care about that, that's not your strategy, I thought, I got to hear what you're doing. Take it away, man. I'm just going to give you the table and I'll ask questions as we go, but show us, what do you teach us? How can our listeners start investing like you do?
Yeah. So first of all, and when you say, play money, I hate that name. Like, don't say it ever again. Like, I do not want you to be playing with your money. It's just, don't do it. Just go to Vegas. If you want to do that, good. It's more fun to do that. Playing your money in the stock market is so stressful. It's not play at all. It's just stress, pure stress. So a bit of a backstory. I'm not even like a financial advisor. I mean, I've studied for the certified financial planning and all the fancy C stuff now that they require me, but I'm not even like an economist or an investor or whatever. I wasn't. I actually studied electrical engineering in Japan, 7 years in Japan. And I was there actually back in 2008. Do you remember what happened in 2008? Mm-hmm. The markets crashed, right? So I have no idea what's happening, what a market crash, who Lehman Brothers is. My English is not even my first language. Like I was trying to figure it out in Japanese and I'm like, Japanese is not my first language either. So I was trying to figure out what this whole thing is about. And one interesting thing that took my attention was that one of my friends was telling me that if you have money in the bank right now, it is going to lose its value because the governments around the world collectively are printing money in order to save the economy. And I'm like, all right, how does that? And he goes on like talking to me about supply and demand, blah, blah, blah. I'm like, okay, I don't get it. What should I do? And he's like, why don't you go do this? So I put my money there again. This one is pure luck. I doubled my money in 1 month in September 2008 based on what somebody else told me. Again, that was not what I do right now, but I'm just telling you this just to show you why I got interested in this. And I was like, okay, this is super cool. I should obviously be investing, but I'm not confident. Like I've never done this stuff. I don't get it. I don't understand the terminology. Maybe I should just give my money to somebody else. And I found a money manager. And the manager was like, yeah, just give me your money. And I gave him my money and he started investing and I just forgot about it. It was all good, well and done until I got fired from my job. And now like, all right, I don't have money to pay rent. I want that money back. And I call up the money manager and is like, yeah, you can have it back, but you got to pay me 75% penalty. I'm like, are you kidding me? Like, what are you telling me? Do you know what I'm talking about? So that money manager, if he was crazy, but it's the same with 401k. Money managers lock up your money. That's what happens. And to top that off, I soon learned that 86% of money managers, Tony Robbins is actually very vocal about this. They underperform the market average. So I'm like, okay, what is the point if I'm locking up my money to a money manager who is not going to give it back to me when I need it and is underperforming the market? Like, maybe I can learn it. Maybe I can figure it out on my own. And I'm like savvy and geeky and whatever I am. Whatever I am, by the way, is not a math whiz. Just I know that I studied electrical engineering. I suck at it. My job wasn't even in electrical engineering. I quit. I was like, I'm not good at it. Bye-bye. So I'm not good at math, but I am geeky. So I was like, okay, let me go figure it out. Went to Wall Street, studied all these things, so many different things. And I got into day trading, kind of like what you are doing right now, because I thought that's the way to do it. I was reporting actually in the New York Stock Exchange. And I was just like getting all these media buzz and hype and look at this, look at that, da, da, da. I'm like, oh my God, this is so exciting. I'm going to go in. And I was like, okay, these people are the best. They're in New York Stock Exchange. I'm going to follow everybody's advice. So I pull out $15,000 savings and I'm like putting it in the traders, super confident that I'm just going to listen to the best. And bam, within a day, lose it all. And I'm like, what?
Oh, wow.
What
A day.
did just happen? And so I was obviously I felt like a loser. I'm like, how can everybody else make millions based on the same advice? And I can't. And there is this guy on LinkedIn. His name is Guy Spire. And he somehow, I think he saw one of my videos on LinkedIn, just like he is like this 10 years in coming. I've always been doing videos. And he reached out to me. He's like, Kiana, I feel like you have a lot of potential, but you're doing this wrong. I'm like, what are you talking about? And he's like, you got to stop trading and you got to start investing. And I'm like, how are they different? Like, aren't they the same thing? And it's like, no. Trading is what, if you're day trading, if you're scalping, if you're doing the robo, whatever the hedge funds do, you need millions and millions and funds, and it's a different game. Mm-hmm. If you're doing it on your own, first of all, it's not tax beneficial to go in and out within a day. Second of all, it's super high risk. Third of all, you gotta be stuck to your screen all day, and you are probably gonna get washed out within a month. And I'm like, all right, so how do we do it? And so long story short, so that is basically how it started. So I put back $500 within 3 years based on the methodology that guy taught me. It turned into $50,000. Now so it's not much, but 1 hour per week, 500 that could have been sitting in my bank, turning into $50,000. That's pretty cool, right?
Yeah.
And now that is literally, and then you compound it. Then $50,000, you compound, you just go in and out every year. I literally make a profit every year because you want to pay less taxes. If you take profit within a year, you're actually on a higher tax bracket. So there are so many things to consider, and there's so many benefits from investing long-term. But one thing that I also do want to address here, because a lot of people are like, okay, so I'm just going to buy something and leave it for like 25 years. That's cool. It's better than not doing anything, but then you're missing out on compounding. Do you know what compounding is?
I know personally, yeah, but I mean, please explain it for the listeners too.
So compound, there is a story of a grain of rice that this girl, actually it's taught in Japanese schools. I have the book right over here. It's 1 grain of rice. Basically goes about to talk about this girl who went to the Raja of India and said, give me 1 grain of rice. She got an award or something because she did something nice. And the Raja is telling her, all right, how can I reward you? And she says, okay, give me 1 rice today and tomorrow double it. And the day after double it. And the Raja is like, this girl is like stupid. I can give her like a lot more than that, but okay, whatever, I'll reward you with that. So the day 1, she goes in with 1 rice. Day 2, she gets 2 rice because double. They've 3, 4 rice, grains of rice we're talking about. But so I'm going to ask you a question here. How many times do you think for this grain of rice to have to double in order to reach 1 million grains?
I'm going to see if I can use rule of 72, but that's percentage driven. I have no idea. Let's say 30 doubles? 20?
20? Exactly. You got it. 20. Oh. So after 20 days, that girl got 1 million grain of rice. Now, of course, you're not going to be able to double your money every single year, but you get the idea. You don't have to be doubling. You can even market average is 8%. With 8%, yes, you were right about the rule of 72. 8% rule of 72. I'm not even, what is 72 divided by 8,
12
9,
years?
9 years,
9 years.
It takes 9 years to double it. If you're making 35%, it takes 2 years. So if you can only aim for 35% per year and like, oh my gosh, like average. Anyway, so we're making a lot more than that. If you're finding the right assets, it's just super easy to do that. But even if you're at 8%, it's still really, really good. And that's just market average. But you want to like get in and out every year so that you compound. You go back in with more money and compound on top of it. So that's the reason why we do that. And that's my strategy. And do you want to know like how to actually do this and start doing it?
Yeah, absolutely. So let's, you know what? Let's use a fictitious example to build a case so that people can follow. Let's say I have $10,000 today and I say, Kiana, I want to use your strategy. Here I go. What do I do? What's my next step? Like, what do I research? What am I looking for? So let's use that as an example, and that I think will give everyone clarity.
$10,000 is the perfect place to start because a lot of brokers now, if you have $10,000 in them, you won't pay commissions. Now, there are brokers like Robinhood, they can go in with $50 and you still won't pay a commission. But if you want to go with a broker like TD Ameritrade, $10,000 is a perfect starting point because you won't be paying commissions based on trades. So the first step is to go and find a broker. What is a broker? A broker is where connects you to Wall Street and all the other brokers and all the other buyers and sellers. What investing is basically you're buying and selling. That's what it is. And you want to be connected. So the broker brokers that. You can go. Robinhood is very easy to use. I like them. They have their own issues, but if you don't want them, TD Ameritrade, Interactive Brokers, Charles Schwab, Public, Webull, Fidelity, E-Trade. If you're in the US, no shortage of that. Do you have international listeners?
Yes, very many actually. Yeah.
So Britain, Euro area, we have the Giro and Saxo Bank are good there. Interactive Brokers is actually international. It can go anywhere. Australia, you can choose from CMC, Self Wealth. Canada, one of the ones that I've heard really good things about is Quest Trade. Another one in UK, I believe is Traders 212. That is kind of like the Robinhood here in the US. So I've heard some good stuff about them too. So no matter where you are in the world, if you have Wi-Fi and you can find a reliable, regulated broker, you can just go and open it up. And because of Wi-Fi, you're going to be able to just participate. So that's step number 1. Step number 2 is something that majority of investors don't take and they don't even think about it. And it's the reason why they lose a lot of money and they play is because you don't know your risk tolerance. And risk tolerance has actually 2 components. First component is your willingness, is your personality. Like right now, Anik, I can tell that you have a high risk tolerance personality-wise because you're like, you know what? I'm an entrepreneur. I have play money. So I'm going to take a lot of risk. Or maybe you don't. I don't know. Like that, there was a questionnaire that you got to take, like just like goes through your personality, your lifestyle, how much time, how much stress you can actually afford. I can't. Like I'm super conservative when it comes to my willingness, especially after I became a mom. When I was younger, I was like a little bit like too risk-taking, a little bit more risk-taking. But then the second component is your ability. Now, ability basically means, hey, do you have the play money? The play money, that is a good term for that. If you have the play money, your ability is higher. If you have your emergency fund figured out, so if SHIT, I don't know if we can swear on your podcast, it's the fan. You have something to fall back on to. If you're an entrepreneur, that's great. Like that actually gives you a lot of good leverage. But you want to calculate that. And it's a combination of both. Your age, how old are you? Like if you're 20, I invest from my 2-year-old. Obviously her risk tolerance is different than mine because she's got time on her end, on her side. I manage also my dad's investment account. He's 80. Obviously I have to invest differently for him than I do for my daughter. My dad clearly doesn't have enough time. He would prefer to have some sort of income instead of like some sort of like really cool, capital gain, awesome tech stocks. So I invest more on those kind of things for him. Whereas for myself, I'm in my 30s and I have the ability to take a risk. So I invest in a combination of, tech stocks. I do have some dividend stocks. I invest in cryptocurrency. I'm not advising you to go invest in cryptocurrency. If you want to invest in cryptocurrency, make damn sure that you know why you're investing in cryptocurrency. I'm going to get into that actually in step number, I believe is 4. Before I get into how you choose your assets, the bottom line, understand your risk tolerance. Like you have to spend time going through your finances and your psychology and all of that in order to figure that out. And step number 3 is break down your goals. Like, why are you investing? Anik, why are you investing?
For me, wealth building, long-term wealth building.
So you don't, perfect. So you don't, and long-term, what do you mean? So let's break it down. So we have short-term. For me, short-term is 1 to 3 years. Mm-hmm. Medium-term is 3 to 5 years. Long-term is plus 7 years. And then we get to generational wealth if you're investing for your family.
I would say 7+ years right now. Yeah, definitely don't need any money short-term and mid-term either. So 7+ years. Perfect.
Amazing. So now you can go and create a strategy around that. And that, like literally now, it just shows that you shouldn't be playing. We should not be looking at the market's ups and downs every single day, right?
Yeah, absolutely.
Like, what is the point if your strategy is long-term, right? Mm-hmm. And even if it's short-term, still you shouldn't be looking at the chart. I do not look at the charts. I do not listen to the news. I actually actively avoid listening to the news because majority of it is hype, pump and dump. We got Motley Fool who's like pumping and dumping. And some of them are good people. They're probably making money, but at the same time, we as marketers and entrepreneurs know that clickbaits work, right? And it's the same thing for those people.
At the time that we are filming this, I know it's releasing later, but look what just happened with GameStop and with AMC and with BB and with, it's scary and it's so artificial. It's completely artificial. So pump and dump is something that I think as of just this last week has really hit the limelight now. You can expect almost some regulation to come around it. But you're absolutely right. For me, I think it's more of an intellectual exercise. I was just curious what it's like, but yeah, no chance am I going to stare at the screen even once a day. It's just not me. I'd rather go off and do and build. But and that's why I said I got interested in what you were doing, because you just said, hey, I just 1 hour a month. That sounded pretty much right down the line of what I want to do. So just to recap for everyone, step 1 was find broker. Step 2 is risk tolerance, which has been really awesome. I wanted to make sure, did we already hit step 3 yet, or did we not? Because I haven't written it down yet.
Goal. Yeah, step 3 is breaking down your goals.
Got it. All right, goals. So go for it. Yeah, so I said 7+ years, and you said people need to know what their goals are, whether short or long.
Right. And then why they're investing. Is it income? Is it generational wealth? Is it retirement? Right. And so for me, I feel like it might actually be kind of like yours. So what I call it my circle of wealth, or my Zen wealth wheel. I've come up with a new cool name for it, is that I invest in myself, and I'm also an entrepreneur, right? So I invest in myself. I go like to Russell Brunson. I pay him a bunch of money. I learn some new skills. And then I go to Myron Golden and I learn something. I go to Rachel Peterson and learn some skills. I increase my income. Super cool. I write books. I've written 4 books, right? Invest your time or money into increasing your income. Don't go into investing because you don't have an income and you want to make an income. You want to have a cash flow. You need to be cash flow positive. Now, I'm not saying like you have to be cash flow positive by $1 million. You can be cash flow positive by $50. You can get started by $50. We just talked about how $1 can turn into $1 million, right? But you need to be cash flow positive regardless. And then I go and invest the excess amount of my cash flow into the financial markets. And that part is called making your money work for you. It's like the polar opposite of being an entrepreneur. Entrepreneurship, you want to be passionate, you want to be active, you want to be motion and like all these cool things. And I'm all for that. when you're investing, you want it to be as boring and as passive and like just don't even care about it. Which is funny because a lot of people tell me, oh, so you make all of your money in entrepreneurship. You're not a millionaire because of it. It's both. I'm compounding. And you know how powerful this is? So I'm investing in myself. I increase my income, compound on my investment account. Then I'm going to invest in myself more. And then I increase my income even more. And then I'm compounding. And then compound is my money is making money. And the money that the money is making more money. And it's just like, I literally, this amount that I just talked about to you about $1.5 million. I literally didn't know that was the amount that all of my investment accounts were in total. I actually, because I have like different investment portfolios, you know, for my husband, for myself, for my different, Roth IRA outside different. So I put them all together for this event that we were doing last week. And I'm like, oh my gosh, the total is $1.5 million. I had no idea actually, because I don't like literally that is how passive I am with my investment accounts.
Oh, amazing.
And it does compound. Now, let's get to nitty gritty into now that you've got the psychology of this right. I do have a method. So I'm not just saying, hey, go wishful thinking and just like, no, don't care about it at all. There is some time that you need to set up in order to set it up. And then, yeah, I do manage it, right? Once a month, right? So step number 4 is to actually going and I call it asset picking, not apple picking, but asset picking. You're going to go and pick the assets that match your risk tolerance and your goals. So I was talking about dividend stocks or capital gain stocks or tech stocks or cryptocurrency. There are so many different assets they can go and pick from. And let me just release you from a fear that you might have right now. Like a fear of missing out. Like, should I go and invest in GameStop? No. Because first of all, there are so many different paths to making money in this market. There are so many companies. There are so many assets. And more often than not, a lot of them are going to be like good assets if you pick them right. And you guys as an entrepreneur have an advantage because you understand companies that work. Like for me, asset picking is so super fun. Like every time that I go and learn about marketing or like I read this book, Play Bigger. And for me, the takeaway was actually less about marketing, but more about how I'm going to choose the assets from my portfolio. Because I'm like, yeah, I want to choose category kings. Have you read the book Play Bigger?
No, I've not.
You've got to read it. It's a really cool marketing book, but it talks about how companies play bigger. Google, Facebook, all these companies that have played bigger, what were the fundamental things that they focused on? So when it comes to asset picking, I actually do not look at their company's financials, because if the company has the right management and the right mission and the vision and the right things that are future forward looking, is way more valuable than whether or not they made money last year or last quarter. And the cool thing about that is that a lot of people on Wall Street only look at the financials. So when like a company that is like super cool, but they missed a company, a quarterly report, they dump it, they sell it. And that pushes the price down. And then I, as a value investor, I go in and then I buy. So I do so the funny thing about GameStop that you mentioned, by the way, GameStop is a very interesting case because yes, regular people went after hedge funds. And my husband was like talking about it yesterday. I was like, it's super cool. And I'm like, that's literally what I do. I just don't do it at a scale. So I don't like go and like hurt a bunch of people. And then now it's just hype. At this point, it's just like literally my grandma was talking, oh, should I buy GameStop? Like, no, if your grandma is asking you about a stock, don't. Like, that is not how it works. But the people who first got in, the very first people on Reddit, those knew what they were doing. Yeah. And that's what we do actually. But like, I'm not trying to make a movement out of it and like go and eat the rich and stuff like that. Like, that is not my plan. My plan is just to like, go, do the opposite of what the bulls of Wall Street are doing, looking at the financial reports.
Those hedge funds are going to end up winning at the end anyways, because the stock's already dropping. They're just going to short bigger and win bigger. In the end, like you said, when there's billions there, they'll float it and they'll wait until the market's ready to be realigned. You can't beat market in the sense of market's market. The numbers work out in the end. So, no, I love what you said, though, about, not obsessing over financials so much, but understanding a company. I remember hearing this one tip once. It was very generic advice, but it really hit home with me a couple of years ago, where someone said, "You want to know what companies to invest in? Look at your credit card." And it just made me think, like,
so good.
Yeah, I was like, wow, that just made so much sense. Such a simple statement. It made so much sense because I spend so much money on Amazon, and with the pandemic, I spend even more money on Amazon. And I think to myself, do I like Amazon? Yeah, I do. I love Amazon. I'm not going to get into the political side of anything. They've made my life easier. I use them all the time. This morning, before I left to come here, there was 6 packages, not even joking, outside of my door that were from Amazon. And so I'm like, gosh, I look at my neighbors, right? You look outside the doors of your neighbors, and it's all Amazon boxes. You see Amazon Prime driving everywhere. You just realize that company's not going anywhere. It's become a part of everyone's lives. I look at my Apple. I buy Apple because they release something. It has nothing to do with whether I need it or not. I just buy it. So my mind towards long-term investing, you're right. I'm not looking at financials. I'm looking at, what do I need to live? Like, at what point am I like, this has become a part of my life now, right? And I have found that I bought those. I bought Tesla. Okay, so this is a couple years ago when my wife bought a Tesla. I became a huge fan of the car. It was an amazing car. Then I'm like, all right, let me go look up this Elon Musk guy. What's going on with him? Why is everyone else so crazy about Tesla? And I fell in love with Elon. I just thought, the guy is crazy, but he's set to change the world. He's our Tesla of our generation. And I was like, all right, I want to support him. I actually bought stock because I was like, I want to be a part of this movement he's creating. And I have made more money on Tesla than I know what to do with. And it's funny because my advisors called me and said, it's way over, it's this, it's that, dump it, sell it, you've made a ton, it's time to go. And I said, you know what? Okay, I'll take my initial investment out. Like, I'll be safe about it, but the rest of it, I kind of want to stay on the journey. I want to see where this thing goes, not because of the money, but because I just love the company. And so a lot of what you're saying is resonating with me, because some of my best investments have been Apple, Tesla, Amazon. These literally were companies I invested in 2 years ago and I've made a killing on because I like the companies.
100%. And it's funny that you mentioned Tesla, because we have 2 Teslas. My husband, we're crazy about Tesla. But there is a funny story about Tesla I want to talk to you about. It's funny that you brought it up, because that is actually going to be the next step. When to buy and when to sell. And your advisors told you to get out. And I know a lot of advisors who actually were like, don't even get into Tesla because it's super high risk. And they didn't actually even like Elon Musk because he's, in their view, some of the advisors, and the reason why they underperform is because they are looking at the financials and if whether or not that company's head is like level-headed. Obviously, Elon Musk is just like crazy and he goes and like make things happen. And many people on Wall Street, actually that doesn't sit well with them. So that is the reason why actually for the longest time. I got into Tesla in 2017. But Tesla, before taking off like crazy, which was in 2020, it was basically going sideways. It was going up and down, up and down, up and down, up and down. So the interesting thing, and the reason why I was going to get to the next step, which is really cool thing about this. Again, rest assured, if you bought it in 2017 and you just waited out, you probably have made a ton of money already. But I also made money during that 3 years while it was going up and down. And that is, again, I didn't have to like up and down like every day. It was going up and down on a cycle of 6 months.
Oh, wow.
Yeah. So the cycle, you just look at the cycle, the price cycle, and it's called market psychology. Some people call it, you can call it market sentiment, technical analysis. So those are also the next step, basically. So we talk about step number 4, picking the asset. So actually, let me go back to the picking the asset a little bit more, because I do want to stress how important that is. Technical analysis is just going to be the icing on the cake. But asset picking, so Warren Buffett says, I think it was Warren Buffett. What did he say? I forgot his quote. Okay, let me tell you what I say. I remember. Warren Buffett says, invest in companies that you would go and buy the whole company. Like, consider if you're actually buying the whole company, like the management, the team, everything all together. I kind of want to one up Warren Buffett here and say, find assets that you're going to be able to commit to, like if you're going to marry a person. Like when you're going to marry somebody, their character, a lot of things come into play, their company culture. Like one of the ways that I actually go and analyze an asset, I go to Glassdoor to see what their company culture is, like what the ratings their like people who work for them are giving them. Is it like an easy to work? Like if they have to, like if people are going to get burnt out, like Apple does actually have that problem. People don't stay in Apple for over 2 years because it has a horrific company culture. Now, the marketing makes up for it because it's just genius, but you want to like take that into account as well. And then of course, like things that you care about, like as you said, you want to invest in something because you just want to support the guy. You want to support Tesla. And that is 100% huge. When you're investing in a company, you are actually helping them financially. You are becoming a shareholder. Even if you have a fraction of a share, you are becoming a part of that company. Yeah, you are becoming one. So consider it as if you're going to marry them and stay with them through sickness and in health. Why do I say that? Because Tesla itself, like literally, if you go to my YouTube, it was beginning of 2020 that people were mad at Tesla. People were dumping Tesla like there was no end. And I went on YouTube and I said, hey, you guys, like, I actually think Tesla is going to go higher. I got so many hate messages there. Like the comment section of that video, you got to go and like, just check it out. It's crazy. You went viral. It has like 50,000 views. And like everybody was mad at me for saying Tesla was going to go up because like at that point, media was just trashing it. And that is why I don't like to listen to the media, because then it becomes some sort of an obsession and people want to like talk about it and it goes viral. I mean, literally the reason why I actually chose that topic was because it was like it was hyped up, but I went and I put in my 2 cents. But normally when something becomes super hyped up, I actually set it back. I move away. Like in the past week about GameStop, I literally got angry about all the DMs that I got about, should I buy GameStop? I'm like, no. So I just went on TikTok and I just rant. I'm like, just stop asking me about GameStop. I'm not going to look at it.
So asset picking, let's go back to the example I was using. $10,000, me, very risk is fine, but at the same time, I don't want to actively manage it. Long-term, I'm good. Where would you put my 10,000? You would put it more like I immediately, as I was listening to you go through the list, I'm like tech stock sounds probably about right for me. Dividend, definitely not. Capital gains, okay, sounds slow. Or sounds like it would be a lower return. Tech stocks sounds like it's, in line with kind of all the stuff I enjoy reading about. And did I get that right? Or is there another class that you think would be good for me?
No, it's super cool. And I also am, as I said, I'm kind of like you and I get it. And then my husband, he's like a rocket scientist. So he's like very into tech as well. For example, if you're a doctor or something. So one sector that I don't get is healthcare, but there is also a lot of money to be made there too. But because nobody in my family literally is doctors, I don't get that as much. So I don't get it. So you want to invest in things that you know. Yeah. And normally what I like to do, I want you to start with one asset, pick it right. And then, so we're going to create the strategy right now together and then go to the next asset. Okay. So here, I actually need to share my screen if I want to show you, but I can just talk to you about it a little bit too. Now
you can share your screen also. What we'll do is tell anyone who's listening to the audio version, they can go to YouTube and see it. So if you want to share your screen, you're most welcome to.
All right. So let's do that because This part of it is where like I really love. Like this is my bread and butter, and just I love.
Yes, we definitely want to see it. So for everyone who's listening on Apple or anything right now, keep listening. Obviously, don't stop. You'll catch a bunch of valuable information. But later on, go to youtube.com, type in Anik Singal or type in The Fighting Entrepreneur, and you'll see the episode there. And then you'll be able to see the screen. We are, you'll forward about 38, 39 minutes in, and you'll see what the screen. So take it away.
Awesome. So let me go ahead. And this is kind of simplified. And it is actually Tesla. It's like, oh my God, you brought up Tesla. So can you see my screen right now?
Yeah.
Awesome. So this is 2008. So the black line that you see here. Okay. So first of all, what you want to do, actually, for those of you even who are just listening in, you want to go to this website called tradingview.com. Okay. So TradingView, what it brings is the price history of any asset, literally any asset. And the cool thing about actually looking at a price action, and one of the reasons why I actually don't invest in IPOs is because, so the funny thing, history repeats itself. History repeats itself over and over and over again. And everything about investing is market sentiment. It has nothing to do with math, by the way. And it's all based on hype and FOMO or whatever the hedge fund managers are trying to do. And the chart, the price action on TradingView is going to actually show you all the emotions of the market in the past. Isn't that awesome? So you can actually see without even knowing about the news. That's why I can like go ahead and say, I'm not going to listen to the news. I'm just going to look at the chart because the chart is going to tell me what's happening.
Yeah.
And I don't need to, like a second clickbaity, medium to come tell me about it. And then, so there is this system that I use. And I learned about it because, so I used to live in Japan. I speak Japanese. And when I was on Wall Street, I started consulting for a company on Wall Street who wanted to expand in Japan. So I was the Japanese consultant. So when we started going back to Japan and work with the banks in Japan at an after party, this Japanese guy called Sato-san came and told me, so we were talking about trading and he's like, so even though like we're hours ahead of the US, we have a system that we can beat the boys of Wall Street at their own game. I'm like, what? So he told me about this indicator. It's a market sentiment indicator that kind of shows where, like, if you just look at the price, it's sometimes actually a little bit harder to understand what the sentiment is. This market indicator, it's a Japanese market indicator, can show you if it's going to go lower, much lower, or now if the market is going to go higher. And because my strategy is that, okay, I've picked an asset that I love, but I want to buy it at a lower price, then when the market starts to going down, when the market sentiment, they call it bearish. Bearish means, okay, everybody's trying to dump it. Everybody, like the hedge fund managers or the big boys of Wall Street, are dumping it. The market is going to go lower. So then I go to my account, my broker account, and tell them that I want to buy. So now I'm going to get into how I do it without being stuck to my screen all day. But let me just tell you a little bit about the indicator itself first. Would that be okay? And
yeah, please go for it.
Or am I getting too deep right now? Are they like getting?
No, this is perfect. I am not going to stop you. Keep going. This is amazing.
So the indicator is called Ichimoku, right? So it's like kind of like you have an itchy back, like, and then mocha. I don't know how to, nobody can pronounce it. It's okay. Don't worry about how to pronounce it. Just call it the Japanese magic system. And so here on the chart, I've actually applied Ichimoku, but I've also taken out some of the lines because when you apply it first, it looks like a bunch of noodles. It's like literally so Japanese. It looks like a bunch of noodles. You're eventually going to get used to it. Right now, I've only kept what is called the Ichimoku Cloud. Do you see this green thing over here, Anik? So that is called the cloud, Ichimoku Cloud. Don't worry about how it's calculated. It's super cool. And then it turns red here and then it turns green here, but it's kind of flat, right? It's kind of flat. So when the Ichimoku Cloud is flat, that means that the market in a longer term doesn't actually have a general direction. So right now, if you look at the Tesla stock, I mean, whenever this is going to release, probably potentially the cloud is kind of upwards. But at this point, and this is a longer term time frame, I'm not looking at like an hourly chart or the minute chart. This is a daily chart that is giving me a very wide range. This is going from all the way. This is like 2 months worth of price action. So it's longer term. And so when the Ichimoku Cloud is flat, first of all, I know that it's consolidating. The market is going to go up and down. And then this black line over here, do you see this over here?
Yep.
Can you see that it just is breaking below the cloud?
Yep.
So that means that, yeah, this like all this craziness that is going behind it, hedge funds are actually starting to really sell. Okay. They're starting to really sell. So that means the price is going to go down. Now, I wouldn't do that with GameStop, but Tesla, I know I will love. Like, I know that it's going to be here for sure. So what I'm going to do, I mean, I could buy now at 323. This is a previous before stock split. So don't worry about the price. But I could also, because now Ichimoku told me that it's going to go lower, I might as well just wait and buy when it's gone lower, right? Because then when it goes back up, I've made a lot more money. Now, there are different strategies around this. Sometimes if I really want the asset, I buy some at the current market price, but then I set something called a buy limit order to buy at lower prices too. Now, how do you set this? This one is, I use a system. This one is Italian. We're very international here. It's called Fibonacci. Now, Fibonacci is a mathematical phenomena. And it's super cool because for whatever reason, maybe because everybody's using it, the market psychology just repeats the same prices that Fibonacci retracement level shows you. Like literally all I did here is I applied Fibonacci retracement levels on my chart, and it showed me that the next psychological level that the price is probably going to stop from going lower is 262. So now, what am I going to do? Am I going to wait for it to I'm going to just look at my screen for 2 months until it hits there? No. What I do is that I go to my account, my broker that you guys just downloaded, if you have Robinhood or TD Ameritrade or Fidelity, whoever, and you set a buy limit order. That basically means that you tell your broker, hey, I'm going to go about my day, but can you please, whenever Tesla reaches 262, just buy 100 shares from me? And you set it and you go about your day, you wash your dishes, you go do your entrepreneurship stuff, you do whatever. And then 6 months later, I got a notification in my inbox of I think that was actually 2 months later. I don't know what the timeline was, but you get a notification. You can set up so that you get a notification that your order has been executed. And now I want to go and make a profit. Now, because still the Ichimoku Cloud is flat, I know that we're still in the consolidation stage, right? And again, you don't have to do it immediately right after you get the notification. Like I have a habit of checking my portfolios once a week on Tuesdays. Now, because this is also what I do as an entrepreneur, I also go live with my elite members and I show them what I'm doing. So it kind of is like I'm hitting two birds with one stone. So I'm making money off what I'm doing. But so I don't do it any other time than Tuesdays. That is like Tuesday morning at 10 a.m. That's my time. That's when I doing it. And so I went, and for a while we didn't have an indication. Next month, a month later, it's October. So my buy limit order went through here, I guess, beginning of October. Then beginning of November, we got this indication that the price now has broken above the Ichimoku Cloud. Now that means that the bearish momentum that market's under, the dumping stage has ended, and now I can go and make a profit. So again, I apply Ichimoku, magically appears. It shows me that I can probably take a profit at 327. Right now that is just consolidating. And what do? I tell my broker, hey, can you sell? And I don't. So just kind of like you did, Anik, you said that you didn't sell all of your shares, and that's what I don't do. that's the same strategy. I don't go all in or all out. I normally take 50% profit at 50% gain. Or you can do whatever that makes sense to you. Right? But here I was like, okay, so I'm going to take a profit at 327, which is a very strong resistance level, made $65 per share gain, which means for the amount of time that I spent doing this, which was literally 5 minutes, I made $6,500.
Wow.
Which means I made like $1,300 per minute of my time that I spent on this asset.
It's incredible. And then you'll just keep reading the chart because the same chart will show you when the next buy time is.
Yeah, this is what happened. This is the strategy in action. So for this longest and for 3 years, over the span of time, and I didn't get the exact tops and the exact bottoms, but just in the middle, because that's like safer.
Yeah.
So we buy and sell and buy and sell and buy and sell, like within 3 years. It's not like on a daily basis.
Yeah. And this is all at tradingview.com. Is this a paid service or is it just available to see these charts?
Free too, if you want to, the free version has like ads on it. If you don't want the ads on it, just pay. I don't know. I pay. I don't even know why I pay. And I think the free version is exactly the same. I feel like I have to pay because I'm like just, I'm the invest diva. But I believe the free version has everything. You can find Ichimoku, Fibonacci, everything is there.
Love it. Love it. Love it. Very cool. Wow. My mind is blown. I didn't know about this tool at all. I've never seen this, never heard of Ichimoku, TradingView, nothing. So if you're listening to this and your mind's not blown yet, I don't know what's going to blow your mind. You take a stock you really love, a company that you believe in, and throw it into the chart and see what it tells you as far as when to buy, when to sell, when to buy, and when to sell. And there you go. Okay. I don't think it gets any easier or simpler than that. It's funny, while you were talking, I started writing down just a bunch of stocks. I have no idea if these are good financially or not. They're just stocks that are a part of my life. There are things I do that are a part of my life. And it was like, there's a simple strategy I've not done yet. Like I haven't just sat down and made a list. I did buy a few that I really like, but what about all of these other ones? I've not checked what they look like. So we got through, finding your broker, risk tolerance, your goals, asset picking, and then you just explained exactly when to buy and when to sell. What else is left? I mean, this is pretty straightforward and simple.
Yeah, no, it's really, really, really cool. So it's like basically buy and sell. Limit orders are like crock pot. You just set it and forget it and go smell the profits and then you compound it. And it's just like super cool.
So you said you have, I caught something. You're like, hey, I go live every week with my students. I do a masterclass. Like, tell us more about that. And I'm already wanting to join it. So I know a lot of people listening are going to say, hey, how do I learn more from you? And then, because I think for me, yeah, it was great. I saw you do it once, but I'd love to see you do this again and again. And I'd really learn it and see what stocks you're really in at that time. Just for anyone listening right now who's thinking, gosh, tell me a stock to buy. We both actually agreed at the very beginning that that's not what this podcast is about. We don't even know when it's releasing. So it's not a stock picking. We want to give you the tools so that you can pick yourself.
Whenever you yourself, become your own money manager. That is my goal.
But Kiana, where can people go right now if they just want to learn more about you and get involved with your training and stuff?
Right. No, absolutely. So the one that I go live on Tuesdays has actually recently changed. It used to be my premium investing group. And now we have because my business is also kind of doing well, it's our accelerator program. I'm not sure. So if you want to you were curious about this, but you want to dive a little bit deeper into what I just talked about, I do have a training with actual, a lot of visuals, and it's free. Of course, at the end of it, I offer my offer. But it's a free training, on-demand training. It's learn.investdiva.com/yes. You can go there. You can just, and then actually, if you go there, I also give you my risk management toolkit because that is we talked about how important it is for you to know your risk tolerance and where you stand financially. And the cool thing about that is that you might think that you're really good financially. You might think that you're sucking it financially and you're in debt or whatever it is. This risk management toolkit is going to open your eyes so much, either in a good way or in a bad way, but you need to know where you stand financially. You can't just ignore where you are financially. And I do my financial kind of analysis myself every year. And I know that you may have even money managers or advisors doing it for you. There is nothing better than you actually getting down and dirty with it yourself. And can I get a little bit empowermentally here? I know, I don't know if you have any women listening here.
Of course.
But if you do, and if you're a husband who care about your daughters and your wife and sister or whatever woman that is in your life, please get them on top of their finances, because it is just so heartbreaking for me when my students come into my class and they're like, I just lost my husband, or I'm a single mom, or it's too late. And like, even if you're making a gazillion millions of dollars per year, Kobe Bryant is an example that I want to give. So Kobe Bryant, tragic death, suddenly passed away very young. Now, the average age of widowhood is actually 59, and women actually live longer in general. They need to be on top of this. And yes, Kobe Bryant left his wife and family with a lot of money, but guess what? If his wife wasn't already in control of their family's finances before that happened, like, just imagine your husband just died and oh my gosh, she also lost a child. Does she even want to think about money? No. And because they're rich, they have so many financial advisors involved. Do those financial advisors have our best interest? Do you think? Why do you think?
Not a chance.
There is a very good chance that she's going to get taken advantage of.
Yep.
And she's not going to know the extent of the wealth, and then she's going to feel helpless. So I encourage you, please spread the word. That is my really mission over here, to help families get on top of their financial future and take control of their finances. Get rid of your advisors, get rid of your money managers. Don't lock up your money, because guess what? Like, Anik is now invested in Tesla. If he decides that he wants to take out all the money that he's invested in Tesla and go buy a yacht, he can do it whenever he wants. He doesn't have to wait for a green light from that money manager who's also going to charge him for taking the money out. You are in control.
Yeah, absolutely. Love it. Seriously, I want to give everyone the URL again. It's Lurn, LEARN.investdiva.com/yes. If you go to onicpodcast.com and find the episode, we'll put it in the show notes as well. I highly recommend that you watch her training and get involved in any way you can. Because again, investing in the market and taking control of your financial future doesn't have to be hard. It can be very simple, and she gives you the tools, and she already gave you some amazing ones for free today. Imagine what you'll get if you're a part of her training as well. Kiana, it's been an honor having you here. Thank you so much. I hope to have you again in the future, and we can do some more deep diving, and you know what? I'll probably go make some investments using your strategy, and maybe I'll report back to how we did. A lot of fun. Thank you very much. I'll give you a final word if you'd like to say anything to our audience.
Thank you so much. It was an honor to be here. And you guys, go get your wealth wheel going. Don't just rely on your money. Go invest in yourself, make more money, and then make your money work for you, because that is the only path to wealth.
Love it. Love it. All right. You heard it from the boss herself, or I should say from the diva herself. Make sure you go out there and do it. And listen, make sure you are right now subscribed to this channel, leave a comment, click like, click the thumbs up icon. If you're on any of our podcast platforms, please do subscribe and leave us a great review. It helps us get this podcast out to even more people. Onicpodcast.com for your binge listening. All right. Lurn.com, LURN.com to be a part of this amazing community. And of course, as I always say, when life pushes you, what do? Stand straight, smile, and push it the heck back. Come on, entrepreneurs, go out there, make your dreams come true, change the world, and let us help you along the way. Thank you for making me a part of your journey. Until next time, this is me signing off. Talk to you later.
Thanks for listening to The Fighting Entrepreneur with your host, Anik Singal.